What is happening, traders? It's Thomas here from VAGAFX, and in this video we are going to be discussing significant structure levels. Now, significant structure is just a large type of structure that the market requires a lot of volume to break through, and therefore if it does break through that structure, it means that we have a lot better directional perception. We're more likely to be trading on the right side of the market, as opposed to normal retail traders who do use smaller structure levels, and therefore they do get caught out more often. We're also going to look at a trade taken earlier today by myself and community members, which did go 5 grand into profit in 1 hour using just 0.25% risk. So we're going to mark up an example now of price action, and we're going to show why most retail traders get caught on the wrong side of the market. So say we have a daily supply zone by here. This supply zone would have happened days, if not weeks in the past, and obviously the trader would have identified this beforehand. We also get price action coming up like this. We have impulsive movements followed by corrective price action, impulsive movements, corrective price action, and we get impulsive movements into and mitigating the supply zone. Now the problem is, guys, with retail traders is they don't realize that this supply zone, as it's happened so long ago, it's less likely to actually play out. The structure that you actually want to be focusing on is these recent swings. The recent swings are occurring due to recent orders being fulfilled in the market. This zone, although it may have caused a large movement in the past, the banks don't just hold their orders indefinitely at these points, guys. Obviously, algo bots do target zones that are the discounted of levels from previous price action, but the actual zones that caused the initial movement, guys, and the orders that were left unfulfilled have likely been removed, simply because fundamentals do change over time. And obviously the longer the time period that's passed, less likely there is to still be unfulfilled orders at these levels. So what the retail trader will be doing is they will see this reversal by here, and they'll go, oh, I can get into a trade now. We've seen a confirmation at this supply zone. And they'll find that one of two things. Either they will get tagged into their trade and their order will get swept straight away. And that's because the momentum is still bullish. Or they'll see the market reverse like this. And they'll be inside this trade now thinking that as this is a daily supply zone, they're going to see a giant price movement like this. But it's not the case, just because if you are looking at significant structure, we can see reversals occurring, printing out swings by here, by here, by here, and by here. We can see that swing highs are being broken. No swing lows are being broken. And therefore, the momentum of the market is bullish. So what can we do? What do we do within my community? We trade the demand and supply zones formed on these swings in line with momentum. When the market does continue on its current order flow, which is expected, this is what we call expectational order flow, we are normally on the right side of the market. And the retail trader, or the common retail trader, if they did or if they didn't manage to lock in profits on this trade, they would have either been taken out of full loss, or they would have been taken out before their intended take profit got tagged. And we're just going to look at the chart now, guys. This is naked price action. There's no indicators. There is no lines or levels drawn. We're just going to do some observations that we can clearly see on the chart. I'm going to get my drawing tool out. Now, what can you see that's happening, guys? We can see that we've got this rangy price action. It is clearly trending slightly upwards, but it is clearly very rangy price action. But what can we see happening continuously in this price action? We can see that the market is coming back into these significant structure points. We can see it by here. We can see it by here. We can see it constantly happening, guys. We can see the market come up, come back down into previous demand zones formed at these swings, guys. these are the structure types that retail traders use. These are the structure types that professional traders use. And this is because at these swing points, guys, the most extreme points of price action is where the orders are coming into play. That's where the imbalance is being made. That's what's causing the swings to be produced. So these swing supply and demand zones are much more important than normal structure because they do contain the supply and demand. Now we're going to start playing price action now. Now this was actually a news impact event, so you can see very volatile price action by here. You can see that even afterwards the market did actually come down into a previous demand zone. We're going to start playing price action here, guys. We're going to see if we can spot a trade. Now obviously this is a reversal. We can see that there was a major low by here. We've had a break through it. So this becomes an extreme point, which we're going to mark out as a swing high. And if breaks, guys, we know that the market is still bullish. We're going to be looking for a bullish setup. Obviously, we do take counter momentum setups within the community, but we only do so under certain conditions. But today, we're just going to be looking at pro momentum setups. And you'll see why this strategy is so powerful and why people trading this sort of style of trading are normally on the right side of the market the majority of the time. And we see that we've had a swing break by here, guys. We've had a nice push, nice imbalance. Many traders would actually be looking for a trade by here. But we know that the market is more likely to come back down into this previous range. We're going to keep playing price until we get a break of a major low or an insignificant low. And we get a breakdown by here. So we can now mark this as a swing high, guys, as we had a major low broken by here. And this is now a peak, which the market, as the momentum is bullish, it is likely to break in the future. But we can follow the market back. You can see all these black candles, guys. These are imbalanced candles. And these are just price movements that occur due to an imbalance in market orders within a market's order book. Obviously, any market, guys, does utilize an order book system, even Forex. This is the EURUSD, which is the largest market in the world, but it does still utilize order books to work. Obviously, it's a decentralized one. We can see that the imbalance starts by here, guys. This is the first black candle. This is the first imbalance movement. We know that the market keeps coming back into these swing zones. We can see that this is the last counter trend candle. So we're simply going to draw a zone by here. We're going to watch the market come back and see if it tags. And if it does tag, we know that this swing high is more likely to get taken just because the momentum is bullish. Obviously, there are counter trend setups to be taken, guys, so you can actually see that the market is coming into these swing zones, even on the way down. So you can actually see that there's a rejection that's been made on this extreme point, and the markets also come into this extreme point as well. So the extremities of price action is what you want to be focused on. You don't want to be focusing on this price action in the middle by here, guys. You are able to get into trades, but the trades are going to be much lower probability. Market comes into our zone. Say we were trading this, we would have our orders set at the top of the order block. We'd have our stop loss on the bottom of the order block. There are some traders that do use the halfway point. I don't recommend this simply because it depends on where the imbalance is on a lower time frame. And on inefficient markets, the market isn't likely to come back all the way. So it is best if you do want to be tagged into more of your trades to actually have it on the top of the order block, guys. You can see that there is liquidity. We won't cover this today much, but you can see that there is liquidity, which gives us more confidence that the market is going to continue upwards. And then we get a break of the swing high by here. Now we can see that the market has now produced another reversal of order flow. We can see, if we zoom in here, we can see that there was a major low broken by here. We can see descending wicks, ascending wicks. This is the lowest point of this candle, and that got broken, and that becomes a reversal, and therefore this is then printed as a swing high. Now, unlike this swing break by here, guys, we can see that this one's broken with a very small amount of distance. And this gives us a slight amount of evidence that the market has potentially or is potentially about to reverse. Now, obviously, we'd still be expecting swing highs to be broken, but this gives us a tiny bit of evidence that the market has become indecisive and the market is more likely to reverse. We've also got clear liquidity by here. And if we bring the market across, we can also draw liquidity like this. We can see that the market was very impulsive here, and now it's started ranging. And this means, or it shows us indecision, guys, which means the market can potentially go the other way. We've also got internal swing points. Now, once we have this swing produced after this reversal in order flow, guys, we can simply follow the market back and look for the last reversal just to find the previous swing that we're looking to break. Now, if we see a order flow reversal like this, where you have lower lows and lower highs being made, followed by higher highs and higher lows, this then becomes the last swing low, or the major swing low that we're going to use for our directional bias. Now, we can see that there was a low that was broken by here, and then a high broken by here. Now, normally, to most traders, especially beginners within my community, they would draw this as the swing low. Personally, I would be using this simply because if we actually draw this high across by here, we can see that there was no significant structure break. So all this actually occurred within a range of a high and a low. This was actually where the last low is broken, and therefore this becomes the swing low that we're going to use to determine our bias. Now, like I mentioned earlier, we have liquidity built up like this, and we have this weak break of structure by here. So if we get a break to the downside through this swing point, we know that the market is more likely to actually become bearish, and we can start looking for a trade to the downside. Now we have a break of the significant structure point by here. We can see this liquidity has been swept. We can also see that it's imprinted a set of equal lows by here. And obviously we have these three structure points tapping on this diagonal trend line liquidity by here. We've obviously got a lot of liquidity building to the downside by here as well. I don't count these guys just because it's a news candle. It's normally basically volume that comes into the market and gets taken out of the market almost instantaneously, which causes this mass volatility, but this candle then can be completely disregarded. Now we've had this structure break by here. Now this is a bit of a stronger push than this break up here, guys. And obviously we've got this liquidity build up to the downside. So we know that the market is potentially reversed in momentum, and we can take a risk and a pop at a short setup. Now all we need to do is follow imbalance all the way back to its source. And you're literally just following the black candles upwards, guys. Now, when using and identifying a zone, you want to be using the last counter trend candle before all imbalance. Now, normally, we would use a candle like this, but this is a doji candle, guys. And doji candles, although we do use them for refined zones without having to go down to a sub time frame, this would be the candle that you want to be actually homing in on. It's more likelihood for you to actually get tagged in your trade than by using a doji candle. You'll find that sometimes using doji candles with this insignificant imbalance can actually cause you not to get tagged in your trade. And just for some further confluence in our trades, we can see that we've got 3 perfect taps of this diagonal liquidity, giving us inducement for our trade. Now, there's not a lot of liquidity above, guys. Obviously, the liquidity above here was swept by this push up, so we can simply put our stop loss at the top of the zone, and we can simply target the swing low that forms once we get the reversals. We do have a reversal here. We can target the lowest point because we know that the momentum is now likely bearish, and we still have all this liquidity to sweep here. Now, trades like this, guys, this is an 11.3 trades. Trades like this can seem far-fetched. I'm going to show you some evidence of me and my community members getting involved in this trade. And not just my community members, many of the traders in my free community actually took this setup as well. And I did actually post the setup on Instagram before it actually tagged, which you can also check. We get a tag into our zone and nice impulsive movement to the downside, sweeping all this liquidity by here. And the momentum is now likely reversed. We do target the swing low, guys, just because there are times where the market sweeps liquidity before continuing back upwards. So we always target the swing low. I do say to take partials, so we would have also taken, well, my community members did take some by here. I did go for the full amount, although it can be riskier in certain cases. But I was happy with all this liquidity build up to keep the full amount open until the end. And some traders do actually take partials by here before leaving the rest continue. You can actually see that the market has actually moved low. Now, I do post these setups online, guys. You can see that I actually posted this setup on my Instagram a couple of hours ago. You can see that I also posted it on my Discord as well. We can see the zone posted yesterday. You can see a lot of my community members getting involved in the same setup. You don't have to be in my paid community to get involved in these setups, guys. You don't have to spend any money whatsoever. A lot of the guys in my free community have been there for a while, and you can actually see many of them getting involved in these setups just from watching my free content as well as my Instagram content as well. So that is it from me, guys. If you do want to message me, you can do so through Discord or Instagram. I will put a link to all my socials in the description below as well. And I hope you all have a lovely trading week. I will catch you in the next one. Peace out.